It's a risk-off warning as stocks look like they're peaking, the dollar's about to rally, and is gold finally about to break out? All that and more on Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre. Thanks for joining me today. Colors on your screen. The moving average, 21 days red, 50 days in green, 100 days in blue, 200 days in tan. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break. Or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500. Let's take a look at the percentage of the S&P 500 stocks above their 50-day moving average. We noted last week that we're not quite at a one standard deviation event yet. That means there are more stocks in the S&P 500 that could breach their 50-day moving average to the upside, putting further upward pressure on price. So in the short term, that does give us a bullish indicator. But how about the longer term? Let's take a look at the 200-day moving average, and what you see is the percentage of stocks here in green above the 200-day moving average in the S&P 500 starting to double top. Not that you can do technical analysis with this, my friends, but we're starting to see double top. What that's telling you is a small number of stocks are pushing to make the indice go higher, where a majority of them are still bearish. The underlying current is not good, but in the short term could see a few stocks push the major indice higher. Let's take a look at the price and momentum screens. Price unchanged at bullish. Momentum, the rate of change on the 21-day moving average slowing down. Clear across above all the moving averages. All the longer term momentum screens are green. Let's take a look at the chart, because I think, my friends, we've got some supply zones, and here you can see it building here on the SPLOI. So let's take and copy these lines here, and that didn't, let's see, duplicate. There we go. Duplicate drawing, and we'll drag it up, and we're going to put a supply zone. You see this volume popping out here? It's kind of giving you an indication of where the trades are happening on the volume profile and where. So we've got some new lines here. We'll just start to build this out, and that's how you kind of start looking at technical analysis. You let the chart start to tell you where things are going. So we're going to establish some lines, start looking at this as a supply zone. In fact, I'm going to move this bottom one up just a little bit here. There we go. Maybe, yeah, I think we'll just leave it right there for now. And so we've got a little supply zone, a sell zone potentially building on the S&P 500, suggesting we could see a push up to the top of this zone, and maybe it starts to run out of steam. So we'll keep an eye on that. Let's go back now and switch over to the NASDAQ 100 and see what it's telling us. Percentage of stocks above the 50-day moving average of the NASDAQ 100 now is still near that one standard deviation event, but you'll notice this is a point where we've seen over the last year where it starts to run out of steam. So the NASDAQ could look a little toppy, maybe have a little push higher in the short term. Let's look at the longer term indicator at the percentage of the NASDAQ 100 stocks above their 200-day moving average. And what do we see? They're hovering just below a -1 standard deviation. So a lot of the stocks still bearish, and that is not good as an underlying current. So short term could see a little move higher. Long term, the market is telling you it's starting to roll over, and that is not a strong position. So how about we look at the price and momentum screens? Price unchanged. Momentum now, the 50-day moving average, rate of change slowing down. Everything else looks good. 1 month momentum now turned positive and rising. Let's go to the QQQ and see, because guess what, my friends? There's a supply zone building, and let's go and move our lines up so we can keep track of this. So we're just going to duplicate the line, or however you do it on your charting software. We're looking for somewhere at the bottom of that volume range. And again, we're going to adjust this as we go. And obviously the top is where the sellers are at. So you see buyers are confirmed here, sellers are up here. That would tell us the short term could see a push up to the top here. But again, those underlying current, the percentage of stocks under the 200-day moving average, or above the 200-day moving average, is not moving up enough, suggesting that the momentum of the overall indice is heading, or index is heading lower. All right, let's go on to small caps, because remember, small caps lead large caps. We're going to add this, the Russell 600 small cap index, because they don't have the Russell 2000, so we'll go with that. And what do we see? The percentage of S&P 600 stocks above their 50-day moving average is now tagged a 1 standard deviation move higher, consistent with an area where you start to see peaks in the Russell or the S&P 600, and now we'll translate that to the Russell 2000 here in a moment. So now we're getting some signs that small caps potentially are out of gas. Now let's look at the percentage of S&P 600 stocks above their 200-day moving average, and you see that starting to roll over again, suggesting the underlying currents is not good, telling us that only a small number of stocks are moving these indices higher. Here's the Russell 2000 IWM price, bullish across the board, momentum bearish. So again, we're starting to see the same sort of story. Price is rising, but the rate of that price increase is slowing. Above all the moving averages, all the momentum signals look good. Let's head over to IWM, where we're probably going to need to draw some supply zone lines in. And sure enough, we're going to need to do that. Finally broke out of that major channel to the upside, and we'll put a line here. That didn't work. Let's try that again. There it goes. So put a line right there, right around the bottom end of that volume chunk. We'll duplicate it again and put it up here. And so what does that potentially tell us? Again, could we see a short-term push up to the top somewhere in this range? Absolutely. But right now we're seeing sell zones building. So remember, down here you have a sell zone. A buy zone, a sell zone. The sell zone flipped as the buyers broke through. And now what do you see forming next? A sell zone. That's the way it goes. All right, let's move on to the transportation index. So we're seeing again some potential weakness building in the major equity indices. IYT price bullish across the board, momentum flipping bullish on the 50-day moving average, now increasing above all the key moving average. 6-month momentum positive and rising. That is usually a pretty good sign for the transportation sector, and well, actually any of them. But let's take a look at IYT, and what do we have here? Is that we've seen a potential double top. Let's zoom out to the 1-year chart. There you go. Potential double top forming now on IYT. So the screens are looking good, but in terms of a double top, that's kind of also suggesting that the major indices are starting to put in a top here. Does that mean, major bear market, massive meltdown? No, it just means double top, but building, and that would be bearish for stocks. All right, so let's zoom out back to the 6-month window and go on to the next, which we've got, wherever it went, you can see it, I can't. There it is. The energy sector, prices bullish, momentum. Look at that, flipping bearish across the board. This is the dollar story starting to build, and you're starting to see it manifest itself in the energy sector, my friends. Below the 9-day moving average, below the 21-day. Let's go look at crude first, and then see what that translates to XLE, because I'm really curious to keep an eye on crude. And you can see clearly a supply zone building up here. Let's go ahead and draw some lines if we can. Copy them. And there it is. Duplicate. And grab that up here. There is at around 85. Pretty close to 85. We'll duplicate again. And you can see the volume. The volume's pretty big up here. So you can almost go all the way down here. Let's zoom out a little bit and see if that makes any sense. We'll go to the 2-year chart and see. No, we gotta go way out. How about 5 years? No, 10 years. Let's go to 10-year weekly, see if we get anything there. Start to see. So again, price came up. We talked about this before, how it's tagging up here. People that were previous buyers are now sellers, and look at the bottom of the range is consistent with where those previous buyers were at. So this looks like a top forming in crude, and that would be consistent when we look at the dollar and see the dollar about to head higher. Let's take a look at XLE, wherever it went. There it is, and we should see something similar, and you see a topping pattern forming there, and that is exactly what we would expect. Remember, the commodity tends to lead the equities, or the metals lead the miners. In course, the case of or the miners lead the metal in the case of gold, but in the case of oil, we're going to look at and see the actual commodity lead the stocks. All right, let's go on to Financial sector, price is bullish, momentum is bearish, nothing changed there other than we see now below the 21-day moving average. So, when you start seeing it below the 21-day and then the 50-day, you start to go like, okay, risk off starting to form. Let's take a look at the financials, see if there's anything to frighten us there. Not really, but you definitely see a supply zone building here. Again, we can go in and make a whole bunch of new lines today. And let's go and put a line up there around 40. And let's duplicate that, or actually it's pretty close to 41, and let's duplicate it again, and you can start to see it's actually probably closer to there. There's your supply zone right around, what is that? And it's not going to show me. Let's try it again. No. Anyways, you see a supply zone. This is a sell zone building. So you're seeing sell zones building across the major indices, the different sectors, and that's giving you some downside indication. Doesn't mean, again, major bear market, just means a downside move. How about the industrial sector? Unchanged from last week, price bullish, momentum bearish. Let's take a quick look at the XLI and see if it's telling us anything. Let's go out to the 2-year chart. It's sitting near new all-time highs and getting rejected, but there's a massive supply zone up in here. Let's zoom in a little bit so you can see that. All this has been sellers. You see now the bar is right in the middle, so we know above that we've seen sellers, below that we've seen buyers. So no clear indication here, but if the other signals are telling us what we think they're telling us, then this should be a sign of a topping pattern in the industrials as well. Again, maybe another push higher to recheck that all-time high, but otherwise we should start to see price come down there as well. Let's go on to the utility sector, and only things are changing here are now it's below the 9-day and the 21-day, and if that continues its trend, well, we'll be watching to go under the 50-day. But utilities have been all over the place. I mean, if you like volatility and you're trading swings back and forth, you probably should look at utilities because they're giving you a lot of opportunity there. Potential bullish flag. You see a flagpole and a lot of selling pressure, but buyers right here below. So potentially a move higher, but you see the moving averages starting to roll. You see the 50-day trending lower, the 21-day moving higher. It's hard to say this is actually a bearish picture considering all the volume support under here. I'm going to have to go with a bullish flag on this one, maybe another push higher on the utility sector, along with the rest, making another effort to get through new all-time highs. It looks like we're probably going to see some rejection on that, but utility sector, it's definitely not a bearish picture yet. A lot of buying support underneath there. How about gold miners? Now, many of you super bullish on gold, and this is what you want to see. Remember, this was all red not long ago. Price bullish through the 50-day moving average. Momentum now bullish across the board as price increases speed up above all the moving averages. 3-month momentum positive and rising. 6 and 9 month now negative and rising. So a lot of indications showing a potential breakout in the miners. But is it there? Let's take a look at the volume profile and see what's going on. Because in GDX, you had that support down here. And I said before, if it holds on these levels, you're going to see it move higher. And it's getting stuck in this volume here now. The question is, what is there? And if we go to the 1-year chart, you see sellers. So that's the risk of the gold miners. They blew through the short-term sellers. You see this potential head and shoulder. Here's your left shoulder, head, right shoulder. Here's your neckline. So gold bull or mining bulls are actually going to look to this to get up potentially, say, into 38, 39 level. We'll see if the sellers can hold, but there's a lot of sellers over this 1-year chart. We'll keep an eye on that. But just keep in mind, I still think the sellers have one last stand there. So maybe a pullback down to, let's say, 33.48 would be constructive here, and that would test that neckline, and then you'd have a nice signal higher for the bulls on GDX. We'll take a look at gold in a little bit, and I think there's some upside in the short term for gold as well. EEM jumping all across up above its moving averages. 3-month, 6-month, 9-month momentum negative and rising. So emerging markets trying to put in a bottom here, and that would be constructive for gold. Now, we haven't seen that in emerging markets until this week, and let's see, what do we have here? We're on the 1-year chart, so there's upward, a magnet potentially now upward into this selling the volume profile line where we've seen selling in the past. But look at the 6-month line. Now, if you're a trader, this is what you want to look for, is support on the shorter term length. So you go to the 6-month. Let's go to the 90-day, and let's see what's down here. And in the 90-day, you see it's breaching that. So it's telling you there is a lot of buying down here trying to support this. Let's go to the 30-day. It's holding right at the 30-day, and I'm going to guess the 10-day is going to be below that, and it is. And what does that tell you? There is upside movement in EEM, and that would likely give it a chance to retest this 54 level. That would be bullish for the miners, bullish for gold. And so there's your short-term play if you're looking for those. But don't get married to them just yet. If you really like GDX, you want to see it pull back, test that neckline, and then go. How about high yield bonds? Also suggesting potential risk off, remain below their key moving averages. Now momentum has flipped bearish on the 50-day moving average as it slows. But oddly enough, the 1-month and 6-month momentum turned positive, while the 9-month momentum turned positive and is negative and rising. So there's definitely some problems here, as one side of this is telling you there is risk off, and the other is telling you, well, maybe there's some risk on coming. Let's take a look at HYG, and there it is. And wow, a lot of selling above here. You can see the selling at 88. Let's zoom out to the 1-year chart, and you're starting to see. You see it's selling at 87 in there, but let's go to the shorter term signals here. 90-day price is volume profile is above. That's not good. Let's go to the 30-day, and let's see 30-day. Selling above. How about the 10-day? There's a little bit, so that you can see there's some buying on the 10-day window here, and what that's telling you is on the 10-day window, there's going to be an attempt to push prices up. That would be consistent if there is a short-term push on the broad equity indices, the stocks. So look for a potential short-term move on high yields, bonds higher, but boy, man, not a constructive picture if you're a risk taker there. Definitely a risk-off move building in high-yield bonds. How about treasuries? We got TLT, of course. Bond King loves the long duration government bonds. Unchanged on price and momentum. Now dipped below the 9 and 100-day moving average. Meanwhile, 3 and 6-month or 3 and 9-month momentum just turned positive and rising. Let's take a look at TLT and see if the king will continue to reign, or if not, if he is, this is it. And now you can see over the 6-month, it broke down below. There's a ton of trading in here, but you're seeing a series of higher highs. So here you see higher high, higher high, higher high, higher high. So buyers are buying at higher and higher levels. Let's zoom into the 90-day window, and what do we see? Prices did not hold there at all. Tried to, so a little maybe short-term risk-off move, but look at the 30 days, ton of support below. So even if sellers continue to push, there's a ton of buyers down there. How about the last 10 days? And my guess is price is above that. Price, I have a hunch, is going to be a magnet to the upside here. I know the market, I know most people don't think that, but I think we got another shot coming up at this 148, 149 level. Clearly there are buyers here. We'll talk about some of the volatility in the bond market on Monday's show. All right, let's go on to gold. Wow, look at that. Price bullish, momentum bullish, above the moving averages, 6-month, negative and rising, 9-month, momentum positive and rising. Wow, and what a week makes of a difference for gold. And here's what I think for gold. You've got a shot at 1900. There's your move for the miners to go higher. There's your move for EEM to go higher. So there's really nothing holding this back from gold going up. The bulls got it. They broke through, and now they're off to the races in the big picture of things. So even if it gets up to 1900, it hasn't invalidated that. It hasn't invalidated that this could still be a big topping pattern. It would really need to break 1900, and at that point, you're going to see a lot of these sellers come out. So 1900, big target for gold. Let's go and take a look at what's going on with silver. And what do we see as silver? Largely unchanged, and well, it is unchanged in price and momentum. Now above the 100-day moving average, 3 and 12-month momentum, positive and rising. That's constructive. 6 and 9-month negative and rising. So all of a sudden, a big change in the metals. I mean, remember, these were all red not too long ago. Looked like they were just going to completely get crushed. And now this is really interesting. I like this. You see, you got that left shoulder, head, right shoulder. It's breaking the neckline. It's got a move now coming up to 26 for silver. Those people who were once sellers of silver look like they're back. And if that is true, then what you're going to see is it come back into this former sell zone, perhaps 27, 28 being your upside targets now for silver. So keep an eye on that, as the bulls look like they've got complete control. But is there one thing coming in the way of all of this? Is this your risk off position? The dollar is telling you that all this bullishness you might feel in the metals is a problem. You're seeing this dollar manifesting itself in crude oil. You're seeing potential peak in stocks. And look at that, price bullish, momentum bullish above all the key moving averages. All the momentum screens are green and positive and rising. And here, my friends, is your risk off look at the dollar. And we've been following this, so it shouldn't be a surprise to anybody that I just clicked on the wrong button. So let's go and zoom out to the 1 year. Not enough. Let's go to the 2 year. What do you see? Huge, massive bottoming pattern. It's now breaking out, and that tells us the next move for the dollar should be to 96 and then into 97. And you've known this because we've been looking at UUP, so it shouldn't come to a surprise. And the equity market is going to be shocked. Look at all that, the volume profile line over the 2 year mark, it broke out. That tells you move for the dollar is absolutely higher. And if that happens, risk off is coming, and bonds will follow. Stocks will head down, commodities down, and that's a danger for gold, as maybe the sellers are just letting the buyers push it up a little higher before they come back. And with that, we'll see you back on Monday for the show. I'm your host, Steve Van Metre, and thanks for joining me this Sunday. Content of this video is provided as educational, informational, is not intended to provide investor advice. This show is not to be construed as a recognition or solicitation, buy or selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steve Van Metre. Personal capacity opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.